the Nigerian Stock Exchange closed February 2025 in the green territory as the all-share index surged 3.18%, reaching 107,821.39. Market capitalization also rose, climbing to 67.1 trillion naira. Well, joining me for more on this, I have with me Victoria Ejugwu, Head of Research at Vetiva. Thank you, Victoria, for joining me today.
Good morning. Thanks for having me.
All right, so we saw the all-share index rise 3.18% in February, but first, I'd like to get your overview of the market in the month. What were the highlights for you?
So like you said, the market, gained 3.8% in the month of February, but overall, it was really a month of caution. Recall that we are coming to January very strong. The market favored banking stocks, but it was a different tale in February. We started to see profit taking on those stocks, but overall, it was positive. It was positive because we saw interest in some large cap names. And any small movements in these names will typically drive the market up. So we saw interest in Dangote Cement, we saw interest in MTN, and that contributed to the overall positive performance for the NGX. But in terms of volumes, we saw that traded volumes have dropped. And that speaks to the caution that I mentioned earlier. The market is sort of cautious, just trying to digest information as they come. Earnings releases have significantly impacted trading activities. We also have some disclosures across industries, across companies, and the market has traded in line with that.
Right, you talked about Dangote Cement, and we saw that, although it didn't make the top 10 gainers, its impact cannot be denied, especially when you also take a look at the industrial goods index. I'd like you to talk to us about, what sort of fueled that performance, especially not just Dangote now, but also taking a broader look at that index and what your outlook is moving forward. Cautious, positive, or wait and see?
All right, so Dangote is a heavyweight, so any movements will tend to affect the overall index. But for Dangote, it was really expectations. The market had positive expectations in terms of what their performance for FY24 will be. I think as of the weekend, they had released their earnings results, and it was relatively okay, given what had happened in 2024. So extreme FX volatility, we saw rising fueling costs, but the company was able to still churn in a profit of about 504 billion. Aside from that, we still saw that the company maintain its dividend payouts at 30 naira per share. So that was impressive, and market was positioning for that. The stock had been trading flat for a while, but it got a boost from expectations for its earnings, and across its peers also. It had significant dividend payouts, and we saw investors position in line with that.
Well, we have the top gainers on the screen now, and I know that beyond the double-digit increase and impressive numbers, when you take a look at this chronologically, you always sort of have your favorites based on some of the metrics. So I'd like you to tell me your best performers and why.
Like it's up on the screen, we had PRESCO, we had Etana, Honeywell, Livestock, Better Glass. A couple of these companies were really driven by corporate disclosure. For PRESCO, we came and made an announcement that some of its shareholders are converting, its parent company rather is converting its debt to equity. And so what that is going to do is reduce the pressure on financing, especially as it relates to FX volatility. And so the market received that well. I started to see trading into the stock. Investors have generally been bullish about the consumer goods sector, given that last year significantly dipped, but this year is looking like a year of recovery for a host of discounters, given the strategies that they have undertaken to mitigate against economic volatility. So the market is sort of picking up these names because they're trading at historic lows. For PRESCO, it was really a reaction to its very excellent results. Overall, there's been cherry-picking activities in the market, favoring companies that have potential for EPS growth. Companies that also performed well in the FY24 fiscal year, taking into consideration what the macro environment has been like.
You talked about PRESCO. I don't know. To my mind, I feel investors are a bit cautious now. Is that what it is?
Yeah. So PRESCO, part of what also drove the rally was the acquisition of Ghana Palm Oil Development Company. the market received that very positively. For now, the market has reacted to that. I think the going forward really is to start to see how the numbers will look like, right? That acquisition will contribute significantly to PRESCO's FX earnings, also drive improved top line for the company. So the market has reacted to that acquisition. Now, we might see some profit-taking activities. But PRESCO is still a buy for us because we think that acquisition will significantly boost earnings for the counter. And so for that, we think it will be cautious, a bit of profit taking. Let's see what the numbers are like before we start to see another reaction there.
All right, let's take a look at the top losers now. Let me get your thoughts. I just want you to take a look at it and tell us what you think and maybe your playbook for investors.
I mean, profit taking really was profit taking in the stocks. For Initial, it had significantly rallied last year. Rwanda as well, Guinea Insurance, Union Dye Consult. A couple of these names had significantly rallied late last year coming into the year. So we're seeing a lot of profit-taking activities. Investors are just, trying to rebalance their portfolios and looking for value elsewhere, which is where value is being created, and the large cap into the likes of MTN. MTN, because of the tariff hike, would favor the company very positively, Dangote Cement as well, PRESCO as well. So really it's just portfolio rebalancing that's been going on in the NGX.
All right, let's take a look at the sectoral performance now. We saw, of course, the industrial goods doing very well. But when you take a look at banking, you take a look at, let's say, financial services, typically, we're not so impressed by the performance. You have something for us there. And maybe also give us an outlook for the month.
Okay, so financial services coming into the year has been one of the best performing index. And that's because investors are bullish. FY numbers will still start rolling for the tier 1 banks. They are bullish on performance. They were bullish on performance. Also, the banking sector, in terms of dividends, typically rewards the market very positively. And so there was also positioning there as at the start of the year. But again, like I said, there's been a lot of portfolio rebalancing going on. Also, profit taking, we are coming to the year strong. We also just want to take profit. And so the banking index sort of eased in the month. We saw interest in industrial goods, really driven by that. For oil and gas, you saw a turn drive that sector. For consumer goods, it's really investors' optimism that has improved following a host of strategies that these companies have undertaken to mitigate against losses. Really, that's what has been driving this individual industries. In terms of our outlook, industries that we think will still be able to perform positively despite any anticipated economic headwinds. We have the agri sector. We think that EPS from that sector is going to come out very strong. We think that the banking sector will still be able to perform positively this year as well. We're also bullish on the industrial goods sector, particularly because we expect the infrastructure drive by this present government to drive volumes for them. And so we might see improved volumes for the industrial goods sector, especially for the cement players. And that would also drive performance for them. In terms of their operations, a lot of them have also taken strategies, to mitigate against rising fueling costs by adopting CNG technology. So we expect that operating numbers coming out from that segment will also be very great and overall positive EPS. So yeah, that sums up our outlook for each of the sectors.
All right, Victoria Ejugwu, it's been a pleasure speaking with you. I wish we had more time to, talk more about this. But some other time, we'll have the time. Thank you so much for sharing your thoughts with us on the show today.
Thanks for having me.